Hey, welcome everybody to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, October 18th, and we do got some important economic news releases scheduled for today. And we'll start off today with the weekly jobless claims, which we see obviously every week. We had 342,000 people applying for unemployment to last week's numbers. We figured that would go up a little bit to 365 and actually surpass that to 388. So not too good on the jobs numbers. There is actually a pretty interesting article on MarketWatch today. Check it out. Regards to some numbers that are being obscured because California is not reporting their labor numbers in a timely manner, so it's throwing numbers off quite a bit. So, and of course, investors aren't appreciating that too much because they're trying to determine the trends. Are we slowing down and stuff, or jobs improving? So, and then of course you got your conspiracists thinking out there because they're trying to manipulate the uh, election. So check it out, think for yourself. And but it was actually kind of interesting. You don't usually hear about this type of these issues before, and all of a sudden you're hearing about some numbers being kind of slow to the market and such. So. All right, so let's jump to the next one. We got the leading indicators, and these are for September's numbers. So we had a negative zero point 0.4. It was actually increased a further loss. So it was actually at negative zero point 0.1 for August, and they revised it to negative zero point 0.4. So we figured it would show some improvement to 0.2 and actually surpass it to 0.6. So we have some pretty good favors there. 6 of the 10 indexes in there were showing positive results. The best was showing housing starts on the real estate side, which was a good thing because every recession we've had since World War II has shown that real estate's kind of dragged us out of recessions. The worst, obviously, unfortunately, lately we've been seeing a lot of this is the manufacturing side. So, which brings us to manufacturing here in the Philadelphia region. So we had a negative 1.9 in September, and we figured it'd come to about break even, is zero, and no expansion, no contraction for October, and it actually jumped up to 5.7. So pretty much every number kind of went way off its mark. If you look at the three here, we had jobless claims jumping from 365 expectation to 388. We have leading indicators showing from forecast at 0.2 and jumping up to 0.6, and then we have Philly Fed manufacturing from showing from 0 to 5.7. So pretty big discrepancies there between forecasts and what the actual numbers are coming out here. At least that's my opinion here. Let's jump over to headline news. There's not really much here. We got the markets a little mixed here. There's not a lot of heavy trading right now. And then China, they came out the GDP showing a slower year over year, showing slower than what it was last year. So it's obviously it makes the markets a little jittery as we do need China being a large trading partner, and if they're slowing down still, where does the expansion come from? So let's go ahead and take a look at the bond market, see what the interest rates are doing. Sorry about this again. We're still having some issues with the candlesticks here, the charts here. So we'll just take a look over here. So yesterday we had a pretty big drop. It was 104.28 is where we dropped off at, where we started off at. I believe it was around 104.60 something. So we dropped down quite a bit. We had price corrections. So pricing went up a little bit yesterday, or a bit. We started the morning up higher, so if you're on the East Coast, you're most likely we're getting a little bit better pricing this morning. But so far, it looks like it could be pricing for the worst. They could be you could see some price changes here shortly, reflecting this where we might come in where it's pretty close to where we left off yesterday. So we may see about the so on the West Coast here, we're going to most likely see pricing about where we left off yesterday. If they didn't make the price correction yesterday, they're putting in today's pricing here. So pricing's worse today than it was yesterday. All right, folks. So hopefully we can break this trend here because right now it's it's showing a pretty big correction from where we were before. It's pretty close to a 50% correction here. So unfortunately, we don't have the chart to show you, but hopefully it'll be up shortly and we can look at it maybe tomorrow here. All right, folks, thanks for stopping by. I certainly appreciate your support. I hope you guys have a wonderful day. I will see you guys tomorrow. If you'd like to see these on a daily basis, again, just stop over at mikesdailymarketreport.com. You can subscribe by the B-burn in the upper right-hand corner, and these will be emailed to you on a daily basis once I upload them. Have a great day.